edition of the Research Corner. I'm Senior Analyst Tony Mulvey, joined on the phone by Kevin Hill. Kevin, how are you?
I'm doing good today, Tony. I hope you had a great 4th of July, and we have a great topic today.
Yeah, I mean, good 4th of July out on the water, and it's a perfect time to bring up what we're going to talk about today. And we saw it on Friday, kind of deemed Bloody Friday for ocean shipping stocks. We saw a double downgrade of a container line, Zim, out of Bank of America, from buy to underperform, which is the equivalent of a sell rating. So pretty big movement there that you don't see a whole lot of. I know we talked about it, I think last week, about trucking that you see when you're looking at valuations and these equity analysts, they put the buy ratings out a lot more than they want to put a sell rating on a stock.
Yeah, usually a hold means sell, and a sell means that things are getting really, really bad because you don't want to upset management too much in a lot of respects. But what you have here is ocean market that is weakening. We're seeing that in all facets here in Sonar and at FreightWaves. And it was an aggressive move down. So if this is the bloodbath, this is the opening salvage of the bloodbath. So it'll be interesting to see, especially once we get into Q2 earnings and in comments by both shippers and shipping companies and steamship lines, exactly where we go from here.
Yeah, for sure. And I think one of these, I mean, the big topic, especially in the downgrade, was mentioning softer consumer demand and a weaker demand here in the U.S. And you see Restoration Hardware, they offered weak guidance initially from back in their first quarter earnings call back in the beginning of June. And they came out and dropped guidance again, citing the consumer's really gone away, that demand's really softening. And I think, yeah, Restoration Hardware tends to cater to more of an upper consumer, but those that were filled by stimulus maybe went into Restoration Hardware and were spending money. They don't have that now, so there's that trading down aspect, I think, is what we're really going to see. And obviously, Restoration Hardware, furniture, things like that, people have already redone their homes, and what you're seeing is this kind of shift in the consumer, right? We've talked about it on here, from goods back to services, and maybe, hey, I don't need furniture, but either if they're still buying goods, maybe they're smaller, less durable goods than a couch or a bedroom set, things like that.
Yeah, how many couches are you going to buy in a span of 24 months, right? And even on the you're trading down, but even the lower kind of tiers of that, you're also hearing weak consumer demand. So I've heard that from a couple large shippers, right, that do furnishing and kind of those type of aspects. And you're seeing a softening in demand, and that's really, you go through the earnings reports of Q1, you're starting to hear it. It'll be interesting to see how much you hear softening demand in Q2 as we kick off earnings season here in a couple weeks.
Yeah, for sure. And we'll bring up our first chart that we have. It's our ocean bookings volume index from Container Atlas, which you'll see. So these are bookings, so when they're submitted to the ocean carrier. So that as far upstream as you can see, that we can see, bookings in the past month are down 18%, and they're down almost 30% in the past year. So definitely seeing the ocean slow down. And this kind of goes in line with what we're hearing from these downgrades and from management teams all around. Softer demand.
You're seeing softer demand, and what demand there is in the economy is pivoting to services. You see that with the flight of Gettymans, right? Each holiday weekend, we just kind of went through another one here, July 4th, where airlines are trying to keep up with demand, have enough planes, have the staff ready. And that's where you're seeing aggressive spending, is experiences, getting back on the road, seeing friends and family, rather than buying your fourth couch or renovating your house once again. That the demand has just gone away.
Yeah, and you make a great point there with the flights, right? You start looking at flight prices, and that inflationary pressure is still really prevalent there. It's because demand's so strong, right? And I mean, supply is limited, and we talk about, I know Craig and the flying team cover it really well with pilot shortages and things like that. But then you also have to factor in demand's as strong as it's been. Well, guess what? We'll bring up a chart here. We'll skip one. We had our ocean volumes, seen similar thing, but we'll bring up spot rates, right? Spot rates have gone down. They're down from the Freightos Baltic Index. The daily index is down 22% in the past month from China to the American West Coast and 17% from China to the North American East Coast. And it goes into this. If spot rate, or if demand was still strong, spot rates wouldn't be falling. I mean, it's almost economics 101, right? Supply and demand set the price. We had on the ocean side, on the ocean side, you're not adding supply the way you do on the truckload side. So it's probably more demand driven than it is supply driven. Where on the truckload side, it's kind of both.
It is, and in a way, it's a little bit of both on the ocean side too. Once you have the, you talk about Long Beach and LA ports, once those are cleared up, you don't have 100 ships sitting out there, and you're, then you're adding a little bit of capacity to it, but you're certainly not adding new ships, right? Yeah. All the ships in service were thrown at that lane, that U.S. or the China or Asia to the West Coast lane, and you see some of that maybe pull back a little bit, maybe capacity tighten a little bit to put a floor on the rates, maybe firm those up. But yeah, you're just seeing spot rates, you're just seeing demand plummet.
Yeah, and it's going to be, we're right into, if you haven't acted for Q4 at this point, you're probably a little late because, those things, once you start factoring it in, it's here, we're at 90 days-ish around from the start of Q4. So, you're really starting to almost be behind the eight ball if you're thinking about it now. And I know a lot of shippers aren't thinking about or have already moved past and into 2023, but there's still going to be some disruptions. But the good news is, with demand going away, it may be cheaper to move those goods even closer to the time that they're needed here in the U.S.
So there's a lot of juggling that'll be around. Back half of the year is going to be a very interesting one to watch for freight, for ocean freight. Certainly see, where demand ticks. We know it's going lower, but exactly how we're going to move into the holiday season, right? Peak season in ocean, and just see what the ramifications are. It's going to be very interesting.
Awesome. Well, thank you so much for joining me today, Kevin. We'll be sure to see you a little later this week on the Spot. Right now, we'll take a quick break and be back with more FreightWaves Now.